Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 8th COT report of 2013. And as usual, we're going to start off with the changes in commercials positions. So here we go. Let's get started and look at heating oil, where we had a 34% change in commercials positions. The same change size in large speculators positions. You can see these changes over here. They're much larger than average, and I would say they're maybe the largest changes in this 52 weeks time period. All this happening after a very steep decline in prices, so we're not surprised at all that we have some great changes in position. The question is, of course, would this affect prices, and would we see a bit higher prices than the near term? Let's have a look at the 5-year chart and see how extreme this market is. Here we go. You can see last week we had a very large COT extreme in the market. Okay, that was a sell signal. You can see it clearly over here. The last time was over here. Again, you can see prices declining. So all of these are pretty nice sell signals from the COT report. So we shouldn't be surprised that after this signal, prices are declining. Question is, of course, how long would they continue their decline? Would this COT change affect prices, and would we see them rebounding from these levels? That's, of course, the question. Let's move on to Canadian dollar, where we had a 29% change in commercials positions. We're at a 236 report extreme for commercials and a 297 report extreme in case of small speculators. Let's open the 5-year chart and see these extremes. So we're getting a significantly large signal from the COT change side, and also we have a extreme in the market. If you look at this 5-year chart, commercials are at their most net long levels in regard to this 5 years range. So that's a buy signal. If you look back in time, whenever commercials were at such levels, usually those coincided with a relative bottom in prices. So we're supposed to expect something similar to happen. We may see prices rebound from these levels because the stress levels are definitely high in Canadian dollar. Moving on to copper, another 29% change over there in commercials positions. Again, some significant decline in prices. It's interesting to see, very interesting to see large speculators and commercial participants being net short, and only small speculators are optimistic about the market. So that, and it's on its own, can be considered a bullish signal. But you can see the change size is pretty large. That's a bullish signal. Now let's have a look at the extreme, whether that coincides with these signals. Would we see a bullish signal over there? Well, not necessarily. You can see that we're a really nice bullish signal from on the COT extreme side would be if let's say commercials were at 25,000-30,000 contracts net long. They're not there, that's for sure, and we're not far away from an extreme that was a sell signal in the market. You could see it over here basically 2 weeks ago. Okay, so in my opinion, the extreme is still valid, and it can continue affecting prices, and we may see commercials move up to net long territories, while large speculators, who are of course leading the trend, are shorting the market as prices are declining. Okay, moving on to COT extreme and large speculators. Let's have a look at that. Okay, here we go. Feeder cattle on top, and S&P 400 also with all-time extremes in large speculators positions. Let's open feeder cattle first. Okay, here we go, and right away let's open the 5-year chart because it's easier to see the extreme over there. So it's interesting that commercials are not at all-time levels yet. You can see even on this 5-year chart that a few months ago, second half of 2012, we had an even greater extreme in commercials positions, while back then large speculators were not at those levels yet. So it's a bit different than other markets. But of course, I've always told you in the past reviews that a lot of the commercial participants underneath the small speculators category because they're not trading in those great volumes. So of course these COT charts don't necessarily correlate the same way as in other markets. So anyways, we are definitely witnessing a an extreme in the market, and I would say that it is a bullish signal from the COT report. Moving on to S&P 400, where we had an all-time signal in large speculators, but also in commercials positions. So let's open the 5-year chart here as well and see this extreme on a wider range. Yes, you can see as the rally continues, the COT is widening. We're seeing stress levels building up. And of course, question is, would we see any buying power left in the market for the next couple of weeks? Or is this extreme really signaling the top in S&P? Life cattle, let's move on. Another livestock where we had a 193 report extreme. So not as large extreme as in feeder cattle, but still a significant one. A bit different than feeder cattle. We're seeing prices much higher. If I open this 5-year chart, yes, you can see it. It's there. So having this buy signal from the COT report is interesting. After all, we're at very high prices, but of course it doesn't mean that we can't see even higher prices to show up in the near term. That's going to be all for this week. If you would like to have a look at other COT charts, then you can do so at our COT charts page. If you would like to have a more in-depth COT analysis, then I advise you to check out our subscription service, where you can add other great functions to your table, look at new COT report types, data types, all sorts of very useful functions that may help your COT analysis. So I appreciate your attention. I hope you enjoyed my review, and I hope to see you next week. Take care. Have a great weekend. Bye-bye.